Friday, everybody. Welcome to the closing beat. How you doing out there? Hey, we're financial advisors here with Jazz Wealth. Laid back. We do things a little bit differently than the rest, as you can probably tell by everything behind us. It's not a typical office. It's a TV studio because we use every opportunity to teach customers, whether that's our weekly emails, our weekly classes, or everything in between. We just thought, let's teach, right? Why just let people invest blindly? Let's help them in every aspect. And as the sweater says, we'll do anything we can to help you get your dough straight. It all starts by opening and funding or transferring an account from somewhere else. So if you have an advisor that's not working well with you, or not working at all for you, maybe you'll keep us in mind at Jazz Wealth. But the topic of today's show and every show today, every day at 5 o'clock, is to talk about the stock markets, the good, the bad, and the ugly. Had a little ugly out there today, but I know some of you are cheering that on. So we'll dive into that in a second. We are also playing a game. It's called Guess the Dow. The website's on the bottom right-hand corner of your page. As promised, every week, whoever is closest without going over to guessing where the Dow closes for the week, we'll send you a $100 gift card, whether you're a customer or not. And if you're a customer, you could choose to have the $100 credited to your account if you prefer. It doesn't affect your contributions or anything like that if you happen to have an IRA or Roth with us. And so our winner this week is Jonadab Esquivel. 28975.55 was their guess. They were the closest without going over, and they've already been alerted. We just need your address. We'll send you the $100 gift card. There's no games or gimmicks. We don't use this as like a marketing pitch or anything, so you don't get emails from us. We're not going to play that game. Just take a guess. As any winner in the past can attest, or anybody that's submitted, we don't spam you. we don't keep your information. It's just there to see if you won, and if you did win, we're happy to give you the $100. If you didn't win, well, you can try again every week. You can do one submission every single week, so I hope you'll take a shot at guessthedow.com. Last night, for our customers, we did a class on Nest Egg. That's our financial planning software. Great class. So we went a little bit deep into some of the action items and things in there. I got a lot of questions today, so that's how I know a lot of people are paying attention. And if you're one of our customers, every week, Thursday at 8 p.m., we do a class, of course. And we're doing a jazz song of the day. Starting next week, we're going to do the jazz artist of the week with songs there for you to look at. We'll wrap up this week with Dizzy Gillespie, A Night in Tunisia. You ever seen Dizzy Gillespie? You'll never forget him if you see him. He's a jazz trumpet player from way back in the early 50s and 60s. He's the guy that when he plays the trumpet, his cheeks go way out there. You can't miss it if you've ever seen a piece of artwork or something done by him. But anyways, A Night in Tunisia, the live version in particular that they did in Cuba, I thought was really good. Let me know your favorite jazz musicians out there. Come on, you guys like jazz. You're not all just listening to hip-hop and whatever's out there. Everybody likes everything. Come on. Anyways, let's start with the stock market here today. We really got a lot of the same thing that we saw yesterday. The Dow was lower by 227, 35 on the S&P, 174 on the old NASDAQ there. Let me explain what I'm talking about here. I'll go to the S&P futures. So what happened yesterday is we got this massive drop. There you can see it right smack on the chart. That happened about mid-morning all the way into mid-morning. It was only 30 minutes long. But it was a massive drop, 1% in the S&P 500. Every bar that you see here is 5 minutes. So it only took 30 minutes for the stock market to fall 1%. So that was a little bit of a clue as to what maybe happened going forward. Today we got the exact same thing. It wasn't quite as big of a drop. We got the exact same thing, but we did it all right off the open there. And it only took 15 minutes for that to happen today. So a little bit of a pattern maybe going on there. Nonetheless, we got our pullback, or at least the start of it. So I know a lot of you are happy and have been waiting for that. You also have very impressive rotation into defensive areas. We'll cover that a little bit later. So the S&P back now to the 20-period moving average. The Dow just below the 20-period moving average if you happen to be following along. The NASDAQ with a healthy pullback here to the 20-period moving average. And the Russell 2000 chopping around near highs, kind of right by the 50-day. Not looking too bad there. I think the Russell gets a little credit for relative strength, although I get it was weaker than the Dow today. Nonetheless, the Dow and the Russell 2000 did outperform the S&P today in terms of losing less than the S&P. The NASDAQ was the underperformer nearly by double if you happen to be playing along there. All the FANG names were going to be weak on the day. Every single FANG name, if you look through them, Amazon, Facebook, Apple, Netflix, Google, they were all lower on the day, over 1%. I believe Google got 2%. There it did. Alphabet, I should say, down over 2% on the day. They've done some good work there to pull back. As far as the Dow, you got strength in Procter & Gamble today, although it was basically flat by the end of the day. That one stood out as a positive stock in the area, Walmart. was higher on the day, and CocaCola added about 0.7% as well, hitting new 52-week highs. Notice anything there? Those are the defensive consumer staples type stocks in that area. That's where all the money went today. On the downside, all the money left the tech stocks. You got Microsoft in the Dow, the lowest, down 3% on the day. You had Apple, of course, we mentioned already, down on the day, and Intel lost 1.7%. Semiconductors had a bit of a rough day. We'll cover that in just a second. In the S&P 500, your better performer was John Deere, or they call it Deere now. It's not John Deere anymore. Deere and Company. Up 7% overall. They had earnings. Earnings overall beat estimates by 36 cents. It was a strong beat. Revenues came in better than expected. And with John Deere, they said that they see signs of stabilization in the U.S. farm and the farm sector, U.S. farm sector, thanks to easing trade tensions and increased farmer confidence. So they were quite positive there. John Deere was your better performer in the S&P 500. You can't ignore Newmont. This is one of the bigger mining stocks out there. Gold had a great day today. We'll cover in a second. Newmont Mining hitting new highs as well, up about 3% on the day. And Procter & Gamble in the Dow and both in the S&P, obviously strong names there. On the downside, you had Hasbro. Whoa, 9% down day. That's new lows right there. Big day, and impressively closed at the lows of the day. Anytime a stock closes at the lows of the day, you go, what happens if the market closed an hour later or 2 hours later? What happened if the market just didn't close today and it stayed open? Well, you'd expect to see probably more downside there in Hasbro. Hasbro basically came out and said they expect to see delays in their shipments because of the virus. You had a lot of companies today reporting what they thought the virus impact was going to be to them. So a lot of that coming out today as more people are crunching numbers, figuring out what's going on. In the tech space, well, there you go. In the semiconductor space, you've got Applied Materials down 7% on the day. Semiconductors were just very weak. NVIDIA down on the day, 4.74%. Micron down on the day, 3.5% back to the 50-day moving average. Semiconductors overall very weak. Let's just jump over to your sector breakdown today, and we'll start with semiconductors, down 3% on the day. I've been talking about semiconductors and their kind of Christmas tree trading there, back and forth, a little bit choppy. One day you feel like everything's okay. The next day you're a little bit scared. It's kind of the signs of a little bit of a top here possibly in the semiconductors. But nonetheless, just continues doing what it's doing. The pullback there, which I know a lot of you are looking for. Before we cover all of that, let's talk about your best performing areas of the market for the week. In terms of the best range from lows to highs, you had utilities, the better performer, although it did close down just a little bit on the day, and REITs, best performer from lows to highs, meaning it had the widest range and was also positive on the week. On the downside, you got industrials, had the biggest range from high to low and was the weaker area in the market, also lost 0.5% on the day, and healthcare in the mix as well, though not as bad. So from high to low had one of the weaker or bigger ranges is what I was trying to say there. On the day now, you've got cyclicals versus defensive. So money coming out of the cyclical areas here, like consumer discretionary. You've got down 1.5% on the day. We kind of mentioned tech already. Tech finally pulling back a little bit there. Was one of the weaker areas, but you had money going into consumer staples. And we've been pointing this out. People staying defensive little by little. Today was more of a stamp by those that wanted to be defensive, utilities and REITs, etc., where it became more obvious that money is going to play the defensive areas of the market. Now, I did a email. So every week I put out an email. I call it Notes from Jazz, just to put out some interesting stats, anything that we're watching, how the markets did. I tend to go a little crazy with that one there. But in one of the emails I said, hey, the tech sector is leading the market. It's the heaviest sector in terms of participation in the S&P 500. So I made a sort of funny joke and I said, well, imagine 10 of you and 10 of your buddies are all sitting there at a lake and you're fishing. 9 of you decide we're going to go sit down and have a beer, and the biggest guy out of your group says, I'm going to keep fishing. I'm going to go out there and try to catch a fish. What happens when he stops fishing? All of a sudden, there's no fish. There's no potential for fish, right? That's kind of what you have in the market. That was the analogy I used to say, look, there's only the biggest, baddest sector out of the group that's doing all the heavy lifting. What happens when that one sector decides, I'm going to take a break, right? Everything else takes a break. And so that's kind of what we're seeing here. Tech taking a break is really causing a lot of these areas to look weak. 10-year. Well, how do I have a way to show that? 10-year, there you go, hit new highs today. So the 10-year actually traded down to 1.45, I think, 1.445, somewhere in there. That is now officially the lowest yield ever. right? So bonds got a bid there. Again, defensive, safe haven, safety trade, all that great stuff. So bonds weaker on the day, so, and prices go higher as yields go lower, so you get how that works. But nonetheless, that one grabs some attention there. As far as the tech space, if you look at the chart there, I mean, I just happened to go back and look at the data, but this is only the second time this year that the tech sector has fallen at least 2 days in a row. Right? There actually hasn't fallen more than 2 days in a row. So if Monday falls again, that would be the first time this year of a 3-day pullback, which I think would be good news for a lot of you out there. Like I said, the sell-off in the sector was broad-based. Microsoft, NVIDIA, AMD, all the tech stocks just took a break on the day there. As for some of the other areas, you've got a lot of choppy mess out there, and I've mentioned this a few times over the last few weeks. Very difficult. Some of these sectors, they're looking for leadership. Some are in uptrends like industrials there. Transports in a very choppy range, not really trending one way or the other. They're looking for leadership, right? So some of these areas, even retail, although it's moving back to highs, you can kind of see in the last couple months there, it's just been really choppy. So these areas are really, really looking for leadership. And I just wanted to kind of maybe give you an example of what that means. So example for transports. You're looking for some, so we've got the market. You know, I always start the same way, these classes all the time. We start with the market, we go down to sectors, we go down to stocks. It's called top-down analysis. Very common, nothing magical there. You start with the market, go down, see how the sectors are doing inside the market, then go look at individual stocks that may be moving the needle one way or the other. Well, if we look at the sector, the transports there, down about 1% on the day, this area of the market's looking for some kind of leadership, meaning we need some stocks underneath in this sector to wake up and start going if we're going to get this sector to participate as well. Right now, you see chop because there's not a lot of money committed to this area. It was committed to tech. It was committed to REITs. It's been committed to utilities, consumer staples. You get what I'm saying? So money's over here, and tech's going, hey, I want to participate too. Well, how does that happen? If you look a little bit deeper into the mix, you're going to find that you need railroads. Norfolk Southern is the biggest holding in the space there. Union Pacific is the other biggest holding in the space, and they're not doing a whole lot of anything. Very small uptrend, but very, very choppy. Those two stocks together make up 20% of the transport. So you would say, if we could see leadership or money come into a particular stock in the sector or a category in the sector, you would say rails. Let's go. Let's get these rails up and going there. Union Pacific right now, I'm sorry, not Union Pacific, Kansas City Southern is the only one doing any work in here. Kansas City's doing its part, right? Those are three railroad companies. And so that's what I mean by leadership. Any choppy sector, you look inside of it and go, who's doing all the heavy lifting? If it's not the big players in the space, you're not going to get that sector to wake up, and thus maybe it's not something you want to look at. Okay. Done with the rambling there. Let's go on to gold. So gold hit new highs today, 1.5% on the day. That's now 7 straight days higher. 11 out of the last 12 days have been positive for the price of gold. And also well, it's going to be a little bit more thanks to where the market's closed, but the returns on gold year to date officially more than double than the S&P. So there you got a precious metal there beating the S&P 500 in the short term. You got REITs hitting highs today, basically on lower rates, and we talked about consumer staples already, where the money is moving or has been moving into slowly but surely. We talked about John Deere reporting their earnings there, covered all of that. Let's take a look at CocaCola. They cut their current quarter, so the quarter they're about to report on. They cut the current quarter earnings to 2 cents a share. They still expect to hit their full year targets. They said this is one quarter, just one quarter. We're gonna have to go down to 2 cents a share. That's what we expect. And investors were like, okay, that's not so bad. I'll stick with it. Chewy.com added 4% on the day, got upgraded by RBC. The company, RBC, the analyst, said they expect that right here is a very they said highly favorable risk to reward. They're basically telling you that this is a good entry price. That's pretty much what the analyst was saying there. So Chewy's got that. The analyst was very upbeat about their revenue growth for the year. They think that their profit margins are going to expand, that people are going to spend even more on their pets, even as they raise prices. So they're pretty optimistic about that. Dropbox, we talked about yesterday. Today it did finish higher, got 20% gain on the day. They were beat on earnings. Everything looked really good with that. They beat by 2 cents. Revenues as expected. They guided higher. They're also buying back $600 million worth of shares. They raised their profit margin target for the rest of the year. It's going pretty good for Dropbox, some would say. Fitbit, you may have noticed, started the day lower. It actually finished flat on the day. They lost 12 cents a share. They were expected to make 3 cents in profit. So we were expecting a tiny profit. Turns out they had a little bit of a loss there. And the problem was, well, they sold more Fitbit thingies. I don't know anybody that wears one, but they sold more of them. However, they had to sell them cheaper. And so that ate into their margins and caused them to lose a little bit of money. And so that's that. All right, let's move on here. 55.6% of the S&P 500 is above the 50-day moving average. We broke under 60. We've been hovering around the 60 to 70 area for a while. We broke underneath there. You can understand what the market's moving lower. If you were to look at individual sectors, real estate and utilities have the most stocks above their 50-day moving average. It's probably no surprise to you at this point, given what we've covered. But so we talk about the S&P, how many stocks above the 50-day moving average. Now what we're doing is going into the sectors and saying, of the individual sectors, utilities, discretionary, staples, things like that. Which sectors have the most number of stocks above their 50-day moving average? That would be real estate and utilities. Can you guess which ones are on the bottom there? I bet you can guess one of them. Energy is an obvious one, has the most amount of stocks below the 50-day moving average. And materials is actually the second one. XLB is one way you can look at that if you decide you want to do that. Let's go to 52-week highs on the day. Hey, almost all of them finished positive today. There was only 25 of them, but they almost all finished positive. Interestingly, 50% of the list today was either REITs or utilities. Defensive, right? People going and playing safe there. John Deere was the best out of the mix there. We don't have to go over that again unless you want to. Pinnacle West traded higher. This is a utility, by the way, if you're looking at this one. This had a good earnings beat there. There were 6 other utilities in the mix on the day. You had Rockwell Automation. ROK is a symbol, breaking out, hitting new 52-week highs, looking pretty good there. Then you had defensive names. You had Dollar General and CocaCola, as we've already talked about. You had 9 new 52-week lows. It's the same names, unfortunately. They can't be strong. If they can't get up off the ground in a strong market, what do you think happens to the weak ones when the markets start to fall? Marathon Oil, Exxon Mobil, a lot of oil names in the mix today. Ford still moving lower, now $7.89 on the day, lost about 2%. Under Armour from their kitchen sink earnings announcement there we talked about, and Viacom continuing just a little bit lower there, still very extended in the short term overall. And that's pretty much what I have for you. After hours here, Wells Fargo. I put it in the scroller this morning. It wasn't official this morning, but after hours, Wells Fargo does agree to pay the SEC $13 billion to settle all those scandals. Holy cow, $13 billion. Where do you think they get that money from? And what do you think the SEC does with that money? Interesting. Anyways, let's take a look at what we got here. Lululemon says the majority of their company's stores have been closed since February 3rd and remain closed. Earnings for, earnings for Monday. So on Monday, let's see the earnings here. You got Cooper Tire reporting in the morning. Hewlett-Packard, they've got a lot going on with what Carl Icahn's doing, the Xerox merger and everything. Carl Icahn said $45 a share today. Hertz report. Remember, Budget had good earnings. Budget car, Avis Budget, is that how you say it? They had great earnings there, had the best December ever, so Hertz better have a good earnings as well. And then after hours on Monday, you've got Intuit, One Oak, Palo Alto Networks, Shake Shack, I believe. Yep, Shake Shack and Tenet Healthcare. There you go. Dividends, you've got Johnson & Johnson, 95 cents, and E-Trade, which is being bought by Morgan Stanley now, still paying out 14 cents, and you're entitled to it if you happen to own those shares. All right, that's all I got for you here today. I'll take a chance and try to answer some of your questions, and we'll call it a day. See what we can do. I see you talking to each other there. Yeah, what's 13 billion, right? 13 billion to just get them to go away. Could you imagine? Oh, man, that does not feel good. And you know, these brokerage firms, by the way, TD Ameritrade and everybody, they have a slush fund just for paying fines. You can actually look and see how many fines brokerage firms have paid. That doesn't mean they're bad. Right? It doesn't mean TD Ameritrade or Schwab or anybody's bad company. It's just that there's a lot of little things that if you do it wrong, the SEC says, or their regulators say, that's $5,000, that's $10,000, that's $50,000. You need to fix all those things. And so they actually keep money off to the side to pay those fines. I find it very interesting sometimes to read through all the different things. It could be as simple as a customer service agent emailing a customer accidentally from their personal email account, $5,000, just like that, gone. I mean, there's rules for everything. You like Shake Shack cheese fries. I hope you ordered enough of them. They're expecting to lose a penny a share, so hopefully they'll have an earnings beat there for you and get a little spike. They're expected to lose that penny a share. Yeah. What are your thoughts on Amazon stock? What do you want to know? So Amazon's awfully extended in the short term there, right? So a lot of stocks in this space, especially tech stocks, they went too far too fast, right? And it's kind of an interesting phenomenon to watch, but they do pull back. Stocks do not like to be far away from their 20-period moving average. Every technical trader on the planet knows that. You got to know that. And so you got to be careful when you buy stocks that are extended like that, and realize what that 20-period moving average is telling you. It's not just a green line on a chart. There's actually a story behind it. How much did Wells Fargo steal from customers? That's the thing. Yeah. You think customers will get some of that $13 billion? Like, hey, sorry, we opened up 3 other checking accounts in your name. We'll credit you $100 or something? I don't think that's going to happen. You love the... I knew some of you'd be excited. Some people just like discounts, you know? I'm one of those guys, too. So I hope it continues, and see what happens. You like Bed Bath & Beyond? They got a lot they're working on now. They got a huge task ahead of them in terms of revamping all the stores. They're spending an unbelievable amount of money, $400 million to revamp a lot of their stores, all their stores, to have less items and everything. If you think that that's going to make them more successful and people will buy more, the argument right now is there's too many things to choose from. How many coffee makers do I need to choose from? How many bowls do you need to sell? And that's the argument that they're saying. We say, we understand, we get that. So what they're going to do is just give you a few choices of everything. What's that store look like then? If you think that means that people buy more, then maybe this is a stock you want to own. I kind of think, Bed Bath & Beyond is not the cheapest company out there when you're comparing for these little incidental things that you really don't care where you buy them from. So I kind of think it's going to put the focus on, wow, you guys are pricey. I didn't realize you guys really charge that much. Even though you send me the 20% off thing all the time, taking that out of the equation, what do you think, right? It's still a little pricey. It's kind of like Wayfair. I like their stuff, but it's just like twice as much as everywhere else. Maybe that's just my opinion. I don't have any data on that one, and you guys know I like my data. You think Snapchat will start making a profit this year? If they could turn their eyes away from changing the platform. These kids don't like that, man. You go changing a platform on them or the user interface, the kids have gone over to TikTok, right? They're very quick to make the switch. They lost millions of users the last time they pushed that out, so I don't know why they make these big changes. I kind of think that you just change a little bit at a time, you know? Don't spook the bear. Any thoughts on cybersecurity? Is that election play for you? You think old Russia is going to put their hand in the election again, and cybersecurity stocks will have a play there? I don't have any stats or data on that, but I'm just saying. Yep. Bed Bath & Beyond stores are cluttered and there's no space to breathe. I would agree with that. You walk in and you trip over the boxes of the K-Cup coffees and stuff. It's too many choices, and they know that, right? So it's just we'll see what happens there. Anyways, I think that's pretty much good. Did I cover everything I wanted to cover? Oh, Tesla, they're building a factory in Germany, and they had to hold off because the environmentalists in Germany said, wait a minute, you can't go cutting down all these trees. They stopped production. Really, they hadn't done a whole lot just yet. They were going to level the field. Anyways, Germany came out overnight and said, you guys are good to go. Go ahead and start building the factory there. So good news for Tesla. They'll have that factory built by Monday, probably. So Tesla didn't do a whole lot today, but I thought I'd point that one out to you. Oh boy, I'm not gonna start with that. Yeah, eBay, obviously in acquisition talks there, small gain on the day, 1.5%. It's going to be volatile until that gets settled. I think the classified ads are being sold as of now. That was the news today. Classified ads business, they're moving forward with that. Yep, could be valued as much as $10 billion. I don't know about that, but we'll see. Yep, I guess they are officially moving forward on that one. You got some private equity groups taking stakes in eBay, probably to make some changes there as well. So that is your news for the day on that one. Cool, I'll wrap it up there. I do appreciate you guys watching, hanging out with me, and I'm glad everything went well today for a change. So you enjoy your weekend. We'll be back next week to do this all over again, and enjoy. Stay warm.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose JazzWealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.